Hello, and welcome to the Beef and Lamb Market Update for September, brought to you by the AHDB Market Intelligence team. As with most other topics of an agricultural nature this year, the weather is also a trending topic in the beef and lamb world, and has resulted in a bit of a turbulent period for the respective markets. To kick things off, let's take a look at the beef sector. During June, the dry weather eventually caught up with producers, as grass growth struggled throughout the country. Producers were forced to send in cattle earlier than usual to ease on-farm pressures. Industry reports suggested abattoir queues were booked up well in advance. Unsurprisingly, the prime cattle price bore the brunt of this effect, falling over 17 pence in 6 weeks. However, looking at historical cattle prices, sharp drops such as this one aren't uncommon. With small pockets of rain appearing around the country, pastures have started to green up again, taking a small amount of pressure off. Some producers are opting to hold on to stock in the hope prices may improve. This has taken pressure off abattoir queues, and the downward trajectory of the price has actually eased a little in the past couple of weeks, rising most recently. As of the week ending the 18th of August, the GB prime cattle price was 357 pence per kilo, a 4 pence rise on the week and 3 pence above the 5-year average. The cow market fared even less favourably during the harsh weather, dropping around 44 pence, quite a significant decline looking at historic price drops. The price may have fallen even lower had it not been for strong demand of manufacturing beef in Europe, meaning abattoirs were already looking for more cows than last year. The cow price hit a low for the year a couple of weeks ago. However, because of similar reasons to prime cattle, the price has since lifted. As of the 18th of August, the cow price was more or less 225 pence per kilo, just over 1.5 pence up on the week, but 5 pence below the 5-year average. Much of the agricultural community will have been looking at the weather forecasts during July in despair. For the rest of the population, however, the good weather meant that England could be cheered on, enjoying the endless barbecue weather. This kept demand for beef strong, and as such, beef and veal production during July was up around 5% to total more or less 76,000 tonnes, the majority of which came from increased cow throughputs, up around 19% compared to July 2017. Lamb prices were also taken on a bit of a rocky ride throughout June and July, falling sharply. The large Muslim festival of Eid al-Adha took place during August, which is likely to have boosted demand to some extent. Prices have reacted and stabilised slightly, however still remain volatile to a certain degree. The price is generally following the seasonal decline for the time of year, albeit more severely than usual. The GB liveweight SQQ price at the 16th of August is just shy of 185 pence per kilo, below 2017 levels, however slightly above the 5-year average. Prices are no doubt being put under pressure by lambs coming off pastures underfinished. As has been mentioned in previous editions of this video, since March and April, production has been noticeably lower in 2017. This is most likely down to particularly high mortality around lambing time, and the recent weather will have also extended finishing times. July is no exception to this case, with production down 3% to total just under 23,000 tonnes for the month. This brings production in the year to 153,000 tonnes, 5% less than in 2017. Every week, AHDB publish Cattle and Sheep Weekly, keeping the industry up to date on the latest news and trends from around the world. If you are interested in receiving the newsletter, you can contact the Market Intelligence team on the email address below.